drop on Ethereum. In this video, I'm going to share with you my thought process and areas that I'm watching very closely, areas of liquidity, and the areas that I could potentially anticipate to see a reaction. Now, first and first, the reason I always like to go through this in every one of my analysis when it comes to Ethereum is because I want you to focus on the overall market direction. And as you can see, the overall market direction is to the upside. We've consistently been creating higher highs, higher lows, higher high. So if I was to pick a side, whether to be a buyer or seller in the market, I'll pick to be a buyer. Now, the reason for that is because the bigger time frame is already showing me that we're bullish. So all I'm looking for is areas of discount to potentially look for a buy to continue higher. That being said, as you can see so far, if we use our Fibonacci from the overall high right here to the overall low right here, this area here is my discount zone. And I'll put that in a box. So if I was to buy Ethereum, I'll prefer to buy Ethereum inside this box. So whenever it is Ethereum comes into this box, if I want to dollar cost average into the market, if I don't have the technical skills to start buying or start looking for a break of structure in the smaller time frame, and I don't have the time to do that, if I have a 9-to-5 job or I have kids to take care of or whatever engagement that I have, and I don't have the time and effort to learn technical analysis, this is what I would do. Using the Fibonacci from the overall high to the overall low, this key level right here is the equilibrium. Anything below this key level is discount. So that means if I'm buying below this key level, I'm buying at a discount position. So anytime I see price come down in here, I can look for a buy. I can decide, let's say I have $10,000 that I want to invest in the market. Price coming down below this key level inside this equilibrium zone, I can decide each time price comes in here, I put in $500 into the market. If it comes in there again, I put another $500 in the market. So far, you can see the first time we came in there, let's say I put in $500 in the market, we displaced higher, came in again, I put another $500, went higher, came in again, I put another $500, went higher, came in here again, I put another $500. Now, if we do come in here even deeper, I'll put another $500. The deeper we go, the more I put in money because everything in this key level is a discount position. And all I'm doing is accumulating positions so that when price starts going to the upside, which is the overall market direction, all my investments would be in profit. Now, that being said, this is for people that don't have time to stare at the charts. They just want the easiest way to do this. This is it. Now, for people who want to know more in depth how to look for potential entries, smaller time frame entries, key levels to watch out for, this next session is for you. Now, what I would do, as you can see right here, everything right here is discount. And I'm looking at what the market is doing so far. We go to the daily time frame. And on the daily time frame, as you can see, on the daily time frame, our overall daily low is right here. I'll make this black so you can actually see what I'm talking about. So our overall daily low is here. Overall daily high is here. So this is the swing low, swing high, and this is my range low, range high. And if I use this Fibonacci, I'll make this the Fibonacci a very different color so you can see what I'm talking about. So if I use this Fibonacci right here, the Fibonacci from the low to the high, anything below this key level, this equilibrium, is discount. And you can see we came into that discount of that range, rallied, came in again, rallied, came in again, expanded. Eventually, I'm anticipating to see price come down here because if we're using this Fibonacci, you can see right here, this is our extreme discount level. I really wouldn't be surprised to see price visit this extreme discount level. So if I'm a trader and I'm looking for a potential area to buy, leverage longs, this key level would be the area. This right here, if I see price come down here, I'll look for a buy from there. But I'm not just going to randomly jump into the market and just start buying. I'll wait for a potential 30-minute shift in market structure. If you've been watching my videos, you'll see when I outline that. But if you still want me to talk about that, you can also let me know in the comment section, and in the next video I'll explain what I mean by that. And this as well, if price should come down here and I see a 30-minute shift in market structure, I'm still gonna make a video about it and share with you, so we watch it all together. Whether it works or not, I'm still gonna share with you the end point of it all. At the end of the day, you have to understand that trading is all about probability, but in order to make the probability to be on your side, you have to focus on one direction. If you want to be a buyer or seller, if you're being a buyer and a seller as well, there's a very high chance you'll be taking lots of losses. So what you're trying to do is reduce those losses, so that when you take losses, it's going to be a small loss, and then when you have a win, it's going to be a big win. So for example, if price comes in here and we see a 30-minute shift in market structure to the upside, we can potentially look for a buy. And if that buy works out, we're looking at the buy taking these highs. And if the buy takes those highs, let's say from here to that key level, that's a 60% move to the upside. If you're taking a leverage long, $50 from here could potentially make you like minimum 500 to 1,000. $50 risk on leverage longs here can potentially make you minimum of $500 to $1,000 if you can catch a buy from here to here. So potentially we're still bullish. We're still within this bullish range low, range high, and price. I'm anticipating for price to come down here. Sell side liquidity resting right here, very juicy. We come down there. Look right here, inefficiency and also extreme discount level. If this key level is going to work, I would like to see an explosive price action. If it's going to work, this is what I would anticipate to see. This is what I mean by break of structure on 30 minutes time frame. If I do see this kind of structure on 30 minutes time frame, then I would like to see an explosive price action to rally above this high. So that is it from me, my analysis on Ethereum areas I'm watching. If you do find this video interesting, if you want to learn more about how we trade, feel free to reach out. You can drop me a message. If you have any questions, feel free to drop it at the comment section. Any other topic you want me to cover in the next video, feel free to drop it in the comment section. I appreciate you, and I'll talk to you all next time.